Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video I'm going to take you through the week ahead analysis. We're going to go through some news for the week and we're going to go over some charts of interest. Now, this week we have a lot of important data. I'll try and break it down as quickly as possible. So let's jump in. So this week I think all attention is going to be here with the Federal Reserve as they plan to hike interest rates by 75 basis points. They're looking to bring rates into 3.25%. Now, we did get some recent CPI data which showed inflation remained high, which could force the Fed to hike further than 75 basis points. I think that is unlikely. However, if it was to happen and we saw a move to 3.5%, then we could see quite a significant move for the dollar. That would be a very hawkish statement. The press conference could be the place where we do see a bit more hawkish nature. We could see maybe the Fed, instead of hiking 100 now, they've done 75 and then they'll do another 75. So that could be the case going forward. We then have Bank of Japan. Now, I wouldn't usually draw our attention to this because we usually know what the sentiment for the Bank of Japan is. However, we did hear talks of interventions last week, and that could possibly be something to take a look at going into this week. So on Thursday, we could see any kind of intervention talk add some strength to the yen. Another interesting one, Swiss National Bank looking to hike interest rates by 75 basis points as well. This is the first time they'll be out of negative rates since 2011. So a big move here. Now, the Swiss franc has been pretty much bullish ever since they announced their previous hike to the minus 0.25%. So another bullish statement here from the Swiss National Bank, and some more strength to potentially come from the Swiss franc. We then move on to the Bank of England. So the Bank of England are looking to hike interest rates, this time only by 50 basis points, looking for a move to 2.25%. The pound US dollar rate dropped to a 40-year low last week, and we've had little reaction from the buy side. So the pound looking very vulnerable here, and could seek lower prices. And then we finish the week off with some services PMI out of Europe, and the UK and the US, finishing the week off with a Federal Chairman Powell speak. So lots of high impact data. What does that mean? Volatility will be high. Usually when volatility is high, risk is averted, and we see dollar and yen are usually stronger. So that being said, we do have different data sets, so we will have to still be cautious. But yeah, it's going to be a very highly volatile week. Jumping on to the strength meter then. So this is a week where the strength meter may not perform to its best capabilities because of such high impact data. But what it does show is that the dollar is the strongest, yen is the weakest, but yen in the reversal zone. The dollar is in the reversal zone at the moment, but only into the +5. So I wouldn't expect a reversal anytime soon, considering what could be announced this week. But it is in that reversal zone, whereas yen is at the low. So could start to see some longer term strength coming out of the yen if we were to see any kind of deep impact from the Bank of Japan. So let's jump on the dollar index. I've marked out a few levels of interest. At the moment, price is in a consolidation. We're trading between the sort of 110.26s down to the 109 spot 28. So in this tight trading range, I think the market will remain in this range until the news announcement. Now, if the Fed hike aggressively and talk about more aggressive hikes, we could see price early breakout of the low at 109 spot 28. Could be a false breakout with an option to see price trade to the 110 spot 80 and even to the September 01 lows, which I've got as 111 spot 31. So potential for price to move higher this week into some critical levels. If the move is priced in and the dollar starts to fall, a break of the 109.28 could lead to a move down to the 107.59. A break of this low could lead to 104.62 in the future. That being said, taking a look at Euro US dollar, very similar outlook because the euro is pretty much the same as the dollar index, or Euro US dollar is heavily weighted to the US dollar index, so you can often see very similar moves, but inverse. And you can see here at the moment, price is consolidating between the sort of 1.0025 and the 0.9955 down at this low. Looking for a breakout here. Now, I'm leaning more towards the potential for price to break to the upside in the very short term, just because we have this unfilled sort of gap here that was provided by the CPI data. So sometimes price does want to fill that out before making a continued move. However, because it's such a highly volatile week and the dollar could potentially continue its move higher, if we were to break below the spot 99.55, we could see the move down to 0.9863, which were these lows that were formed most recently. But this range here is going to be pretty important this week. Moving on to the pound then, so 40-year lows at the 1.1350. Look at the price action. We're not really seeing aggressive buyers coming in at this point. You know, aggressive buying to me would be even something like we had over here, where we had a really strong rejection candle and price moved to the upside. We don't really have that here. So is that telling us a sign that the move to the downside for pound US dollar is not over yet? We have crept back up into this weekly volume profile. So, you know, we do have some levels of interest, which could be this low volume area at 1.1440, or we could look at the point of control at 1.15 as an area of resistance. A break below 1.1350, there's not a lot below there, so we could see some significant sell-offs below those lows. Finally, pound yen. So pound yen made some new lows last week. We can see that price broke through this low after retesting one of our key areas that we spoke about in a previous video, 167.87. Nice rejection of that level, broken through multiple structure lows now. What was interesting on this latest impulsive phase, we had a bit of a pause at 164.0. So that could be a little bit of an area of a sticking point. You can see we're consolidating here. If price was to get to there and reject it and we see sellers coming back in, 164 could then see prices coming down to sort of the 160.65. So that could be something to be aware of. Also, I think if we break the lows here below the 162, sort of 60s, 70s, that would also invite some selling pressure. That's all I got for you today. I hope you enjoyed this video update. It's going to be a very volatile week, so please trade safely. I hope you enjoyed this video update. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.